Hello everyone, in today's video we're going to take a look at the S&P 500, the NASDAQ, the large tech stocks, the VIX, the Chinese markets, the Indian markets, the Forex markets, the VIX, everything all in between. We're going to take a look at how everything coincides and how we can put all of this together to get a good holistic view of where the market is going to go. All right, so I hope you guys are enjoying these videos. Please make sure to like, comment, subscribe. Don't forget to do all that good stuff. And without further ado, let's get started with the video. So today was one of the best trading days that I've had in a very, very long time. It's like almost every day that I make these videos, I'm just talking about how good we're doing. But genuinely, I mean, there's just to make things very clear, I'm not very, unfortunately, I wish to be way more consistent now with these YouTube videos. But the thing is that I make money from trading. And, I took 10 trades today. The only trade that didn't really skyrocket was I was not as convinced about one specific trade, so I sold that a bit early, but I ended up skyrocketing as well. So this was a really amazing day in general. I post every single entry and exit point in my Discord server. Every single time I'm entering or exiting any trade, I post it in the Discord server, and as you can see, genuinely, guys, like the proof is right in front of you. You cannot lie. These are statistics right in front of your eyes. I even made a Google sheet that basically tracks the performance so far. I've taken 37 trades. 34 out of 37 trades have worked. That's a 91% success rate. So out of all of the wins, on average, it's a 35.5% gain on average for every single trade that I take, which is pretty amazing. Excuse me. It's unbelievable, actually. It's very amazing. And this comes from hard work. It comes from consistency, and it comes from pattern recognition. These patterns and these trades that I take, people in my group, they automatically know, okay, Hamid would end up going long here. Hamid would end up going short here. It's because the same patterns persist over and over and over again. So if you guys want access to exactly the trades that I'm taking, click the link down below. You guys gain access to my trades. You guys gain access to my analysis, the levels that I'm watching, the support and resistance levels, as well as my trading view indicator. My trading view indicator has helped many people pass their entire funded exams. They're funded traders purely from the indicator in and of itself. So if you guys want access to all of these things all in one package, click the link down below or click the link in my bio. I hope to see you guys there. Let's get started with the rest of the video. All right, so first and foremost, this is a chart of the S&P 500. The S&P 500 futures. This is not a bullish pattern. Whenever we get a pattern like this where we monstrously move to the upside, but it's a really ugly red candle here, it's not the most bullish pattern. Yes, we are holding above this trend line. By all means, guys, yes, I understand we're holding the trend line. Congratulations. We have not retested the 23.6% fib, which is generally very bullish. Congratulations. But in terms of a day trade, if I was trying to day trade, if this was the 1 minute time frame, I would not go long here. I would rather go short as we retest these levels here for a move to the downside. That's just my personal opinion. I would absolutely I would not go long here because this is at a level of support. Teeny tiny moves, teeny tiny candles here. Multiple failures to break above 6,500 on the ES. This is clearly showing some weakness, and we're barely breaking up from a level of support. What we want to see when we are testing a level of support like this, we want to see massive rips to the upside. Are we getting that currently? Absolutely not. We're not getting that, which is telling me buyers are getting a bit fatigued. And you're going to see in the rest of the video on Bitcoin, on Microsoft, on a lot of these other stocks, at levels of support, the longer it takes to rip, the higher the likelihood chance that we end up moving lower. That's currently what I'm getting from this sort of situation here on the ES. Next, let's go ahead and take a look at the NASDAQ. So this is a daily time frame of the NASDAQ. A bit of the same concept here. a bit different as well. The NASDAQ is showing a falling wedge. We held the 23.6% fib, which is bullish. We got a retest compared to what the ES was doing. We got a retest at a major level of support with a falling wedge. Technically, this setup on the NASDAQ is a lot more bullish than what the S&P is. But what really needs to happen, once again, is the NASDAQ really needs to break back above 23,900. It needs to start showing strength back above levels of resistance. It can't just continue to hold this level of support. We can't just be happy with this because we need to start seeing buyers really step in and start to rip this up above levels of resistance. If that does not happen, then it becomes very difficult for us to remain extremely bullish. But it's starting to try. It's trying to be bullish. It's trying to be a lot more bullish than the S&P. But the reason why it's really not great is because this is a major sell-off from an extreme overextension to the upside. We're going to take a better look at this as the rest of the video goes after we look at the large tech stocks. But the precursor is that momentum is still bearish and we need to break to the upside. When we look at the SPY and the QQQ later on in the video, you'll understand what I'm talking about. But next, very simply, I want to walk you guys through the large tech stocks so you guys get a better understanding of exactly what I'm looking at. All right, so first and foremost, let's go ahead and take a look at Apple. All right, so this is a daily time frame of Apple, right? Clearly, you can see that Apple is showing extreme strength overall, right? But what's been happening? We've been failing to break back above 235. This is clearly not what you want to see if you're bullish. We've had how many days? 1, 2, 3 days in a row where we could not break above 234, where we wicked above 234 for multiple days in a row. And what ends up happening? New lows? Is this really where you want to start becoming bullish? Not really. So if Apple is starting to show a lack of strength at a level of resistance, we really need to see if this level of support holds. So the level of support is 230. We are at the brink of this support. If 230 breaks to the downside, then we're going to see 228. This is not an extremely bullish situation on Apple, okay? It doesn't take a rocket scientist to understand that. 228 to 230 is going to be a very important zone on Apple. So to make this very clear, this is a daily time frame of NVIDIA and AMD. Okay, so NVIDIA is trying to do what it needs to do. I was saying in yesterday's video that NVIDIA needed to break back above 183 for a continuation of bullish momentum. What has been happening for this entire time here on NVIDIA? Clear as day, stagnation at a level of resistance. Multiple wicks where we failed to make new highs, which led to a massive wick to the downside. And now we're trying to break back above 183. This is a pretty solid situation. NVIDIA is really trying to do what it needs to do here. But the issue is that it really needs to break above quickly. If it doesn't break above with time, because time is also a constraining factor. We have Fed minutes on Wednesday. If by Wednesday's close, in my opinion, if NVIDIA is not above 183.50, this can really start breaking down lower, primarily because of also the weakness that we're seeing out of AMD. So AMD, clearly not as strong as NVIDIA. AMD had just a foot on its momentum, and it just continued to fall lower today. It needed a break above 181, 182. I was mentioning that in yesterday's video. Instead, we ended up making new lows, but we have come and retested this 38.2% fib at 175.60. Is this where you want to start going really long? Not really. I would much rather go long AMD closer to 170. That would be a bit lower in terms of this falling wedge that's also being created, and basically it would make a better opportunity to go long. So there's a bit more room to go to the downside on AMD. But all in all, as long as AMD can reclaim, if AMD can really reclaim back above 178 and hold above 178, then we can build off of this falling wedge, and then eventually we can make a move back above 181, 182. it all really depends on NVIDIA's strength as well. So that's currently what's going on the chips on NVIDIA and on AMD. So Microsoft is basically what I was basically showing you guys. The longer it takes at a level of support to bounce, the higher the probability chance that we make a new low. So Microsoft, as we know, it's been in a massive uptrend since May. We've been in a massive uptrend. Awesome. Multiple touches to the upside, held this level of trend line, right? Reclaimed it. Then we ended up breaking down lower with this massive red candle. This showed extreme bearish momentum. And the longer it took to bounce off of these lows, the higher the probability chance that we would end up breaking lower and the momentum would continue. That's exactly what ended up happening today. That's exactly what ended up happening on the crypto markets as well. If you guys look at the charts, we're going to take a look at that afterward. Clear as day. This is what I'm worried will end up happening with the S&P and the NASDAQ. The longer it takes for us to bounce off of the weakness, the higher the probability chance that we're going to end up getting a move to the downside, okay? So Microsoft ended up filling the gap here at 515.90, and basically 515, 516 area is a major level of support now on Microsoft. We could continue drifting lower, but Microsoft really needs a break back above 523, 524 for a continued move to the upside. Until then, Microsoft this is bearish territory. This is bearish move. And it's a bearish momentum. All right. Amazon, like I was saying, is one of the top performers. It's one of my favorites. We were bullish on Amazon down here at around 214, 215. And now, as you can see, Amazon is at 230. It reclaimed back above our target to the upside. And it's looking like it's holding 230. So very, very simply, as long as Amazon can hold 228 to 230, we could continue rising upwards. And in general, Amazon is one of the most bullish. It's one of my favorite stocks. It's a really, really amazing technical setup as well. So we're going to see if Amazon can continue to rally and continue to push forward. And if it can hold 228 to 230, then new highs are definitely right around the corner. And another stock that is also I'm also very, very bullish on is Tesla. So this is a daily time frame of Tesla. I was also very, very bullish. And essentially, it's holding 328 to 330. I didn't want to go long. This is not really the time to go long. I would rather go long if we break above a level of resistance or if we come back to a level of support here. But for us to try to go long in the middle of this range is not really intelligent. But overall, in the long term, in my opinion, I do think Tesla does end up seeing over 400 in the coming months, sometime in Q2 of 2026. So Tesla is definitely very, very bullish. Very similar to the NASDAQ. It's creating a falling wedge. We're at a level of support on Tesla. It held to 330, falling wedge, right? So as long as it holds above 330, 332, this can continue rallying and end up seeing 350 soon, okay? So we're going to need to see if Tesla's falling wedge will continue. This might end up helping the case on the NASDAQ, but, we're going to need to see. So that's that on Tesla. Google, not really doing too much here on Google. Once again, it was just basically failing to break above 204. We were bullish on Google down here at 175-ish area. Now we're up here, and we wicked to a new high, failed to break above for multiple days. For about 5 trading days, we could not close above 205. It's very bearish. It's not a bullish sign. So with that being said, this is not what you want to really see. And this is not the time to really start going long on Google, in my opinion. This is more so the time where people start to take profits. And the longer it takes for us to make new highs off of this really ugly sort of setup, the higher the likelihood chance that we're going to end up breaking lower. So keep that in mind on Google as well. Meta, same concept as these other stocks. Basically, multiple days where we failed to close above 793, right? 792-ish area. Multiple wicks, 1, 2, 3 wicks in a row where we failed to close. Boom, smack down to the downside. 2.5% drop for the day. It's clear cut. So the longer it takes for us to break to the upside, the longer it takes for us to hold a level of support and bounce, it shows that buyers are being fatigued, and the higher the likelihood chance that we're going to end up falling. So very, very simply, that's what's basically happening on Meta as well. And Netflix, I was mentioning how Netflix, there's still a bit more room to go. So as we know, Netflix has been in a massive uptrend since April. Massive, massive uptrend. Awesome move. Shot up to 1,300. At 1,300, we ended up breaking to the downside, and we have not seen that level since. So as you can see, now, this is clearly retesting the 50% fib here. And as we get to this 50% to 618% fib on Netflix, this is exactly where people that went long down here into this weakness are going to start looking to take profits. So with that being said, up here, in my opinion, on Netflix is not the time where you want to start leaning long. In my opinion, instead, you wait for pullbacks. The closer you get to the 618% fib, the higher the probability chance that people are going to start taking profits. And instead, look for dip buying opportunities as we hit these levels, okay? Because just technically speaking, this is where a lot of people are going to want to start taking profits, okay? So I hope this makes sense. That's that for Netflix. And of course, we have to take a look at the VIX. We are looking at the VIX because it has an inverse relationship to the market. If the VIX is going to rise, that means the overall market should be falling. What do we clearly see right now on the VIX? The VIX is making a falling wedge, which are bullish patterns, into a level of support. So clearly, as you can see, the VIX is really trying to hold a monstrous level of support here with a falling wedge. Okay, so once again, falling wedges, bullish patterns, into a level of support, should bounce. If the VIX bounces, that means the overall market should be falling. We did gap up on the VIX today, but intraday we ended up falling lower. If the VIX can maintain above 1450, then this falling wedge can also continue to the upside. But until then, this 14 to 1450 level on the VIX is very, very important levels of support. If we end up breaking down lower, and if 1450 really gives way, then this is going to be a really bullish move on the overall market. And especially if these lows can break. If 14 can break, then the overall market can really start skyrocketing. But once we get to this zone here on the VIX, this is like monstrous, monstrous support. And this would be a really, really solid, great opportunity to go short on the overall market, because the odds of us bouncing once the VIX gets down here increases very dramatically. Okay, so there's that for the VIX. So now what I really want to just drive home, this is a chart of the SPY. We were watching how if something took a very long time at a level of support, things would drop, right? So I was mentioning how the SPY needed to break above 644.50. That didn't end up happening today. All day in the morning, it was such an easy opportunity to basically just lean short because the momentum is bearish. This is a massive red candle. What happened a few days ago? We had a massive spike to the upside outside of the upper level of the Bollinger Band, which led to a massive red candle afterward. Now we're basically holding support for our dear life. Is this where you want to start really leaning long? Not really, okay? What I would rather see is a break above 644.50 or 645 on the SPY for a continued move higher. We could end up bouncing. The IWM is also showing a bit of strength. The NASDAQ is also trying to show some strength. But this is just an ugly setup, guys. This is just an ugly setup. I would not really want to go long. In terms of a day trade, if this was a day trading setup, I would not want to go long this. I would rather go short as we got closer to 645, honestly. And but even then, I would definitely, just the one trade I would not take is trying to go long here. And that's the problem, honestly. That's the sort of issue that we're seeing right now. The QQQ, the NASDAQ, same thing. This is just a really ugly situation to try to go long. A couple of days ago, we had a massive spike to the upside on the Bollinger Bands here on the NASDAQ. Shows overextension. What happened afterward? We got a sell-off, and now we're in sell-off mode. So the NASDAQ is trying to hold 575 for dear life. It could bounce, right? Over the past couple of months, couple of weeks, we've been bouncing like it was, just monstrous moves to the upside. But the momentum is bearish. We need to see a move back above 581 on the NASDAQ for a continued move for bulls to really reclaim this. But once again, similar to Tesla, this is a falling wedge at a level of support. But would I really want to go long here in terms of a day trade? No, I would most likely just lean short as we retested 580. Honestly, this is what I would do. In terms of a day trade, I would be going short as we test 580 because the momentum is clearly bearish. This is not a time where you would want to really go long, in my opinion. I could be wrong, but just purely from a day trading perspective, this setup is a bit bearish, okay? I could be wrong. Everything changes minute by minute, candle by candle. Just purely looking at this, I would want to wait for 580 for a short, honestly. And that's what I would probably do in a day trade. And last but not least, let's go ahead and take a look at the IWM. So the IWM is very, very important to monitor because it has a very strong relationship to the movement of the S&P 500. So similar to the NASDAQ, the IWM also moves the S&P. And currently, this is a clear-cut weak move on the IWM. We had a monstrous move to the upside, huge spike to the upside in terms of the Bollinger Band, and then a sell-off right afterward. So clearly, this is weak momentum. Clearly, this is very similar to the massive red candle that we also saw on Microsoft, right? So as we're holding below the 50% fib, once again, guys, the longer it takes for us to bounce off of 226 and make new highs, the higher the likelihood chance that we're going to end up falling lower. So, in my opinion, what's most likely going to end up happening is the IWM can come back and retest 229 to 230. If that ends up occurring, the SPY is also going to bounce. The NASDAQ is also going to bounce. This right here, this whole area between the 50% fib and the 786% fib, all of this area would be an amazing opportunity to reload on shorts. At that point, this would cause a bear flag into a level of resistance, and it would cause a move lower. That's what I'm currently looking at on the IWM. This is clear-cut weakness, clear as day bearish structure. This is not what you really want to see. So I hope that makes sense. And yeah, that's really that for the overall stock market. I can't really just overall things can move a bit higher, but I gave you guys the levels. I gave you guys the levels that need to be reclaimed for a continued bullish move. But overall, things are sort of half and half here. The IWM, the SPY, and the NASDAQ are all at levels of support, but it's time constraint. The longer it takes for us to bounce off of these levels of support, the higher the chance that we're going to end up making new lows. All right, so keep that in mind. I hope this made sense. All right, so Bitcoin, as I was mentioning in yesterday's video, the longer we take to break above a level of resistance when we are teetering at a level of support, the higher the likelihood chance that we will break down lower. It ended up happening on Microsoft, ended up happening on Bitcoin, and the same setup is basically occurring, sort of, on the S&P 500 and the NASDAQ. And that is a bit worrisome, okay? So that's what I'm basically trying to show you guys, that we really, really need to start showing some strength on these other large stocks, because what we see from Bitcoin was a precursor. Bitcoin showed a lot of strength prior to the market, okay? So Bitcoin helped, the crypto market in general helped move the market upwards. So that's currently what we're looking at. And we got a big wick to the downside. Bitcoin still has room to retest 115. Generally, when we see these large wicks, we end up filling them. So this is a large wick that we're seeing on Bitcoin. We end up filling them, okay? So in history, we end up always coming back and filling these wicks. Whether they happen right away or whether they happen eventually, this ends up coming back and filling this wick. Okay, so essentially we have a very high likelihood chance that 115 is going to be retested again. The only real way that we get a solid break to the upside is if Bitcoin starts to show strength above 119,500. I'm not sure if that's going to happen soon, but we really need to see a break above 119,500 on Bitcoin. So this is a daily time frame of Solana. As you can see, Solana was also trying to show some strength. It was way more bullish than Bitcoin was, but we got a massive spike down lower. Solana was also red, accompanied by Bitcoin. We got a massive drop below 185 on Solana. Solana needs to it needs to reclaim back above 193 for a continued move to the upside on Solana. And once again, I would never try to go short on any cryptos. I would always try to go long. And right now, we need to break above 193. If we don't break above 193, Solana can drift down into the low to mid 170s. And this sort of structure right here, this candle, this setup is not bullish, which is why we really need a strong move to the upside to invalidate this disgusting bearish pattern. Because all eyes purely from this pattern right now is pointed to the downside. And that's just the way it is right now on Solana. This is a very bearish pattern. So this is a daily time frame of Ethereum. Also, very simply, we were trying to hold support. We were trying to hold 43.75 with dear life. Similar to Bitcoin, we were trying to hold it for dear life. But what ended up happening? Once again, the longer it takes for us to bounce from a level of support and to break above a level of resistance, the higher the likelihood chance that we will make new lows. And that's exactly what ended up happening with Bitcoin, Microsoft, and Ethereum. So this is something that we really, really need to take into consideration and really recognize the patterns across these different asset classes, because it's the same market makers and it's the same people, same banks and hedge funds throwing money, the same algorithms looking for the same patterns. So take heed of that. This is something that is permeating and starting to show in the S&P 500 as well as the NASDAQ charts. So keep that in mind. Once again, we still have more room to the downside on Ethereum. Ethereum does have room to go below 4,200, and it would be a solid buy, in my opinion, closer to 41. This would be an amazing opportunity to go long. This would basically be the lower end of a falling wedge as well. Solid opportunity to go long for a great upside move. But for now, as long as Ethereum can hold 4,300, this is still a very bullish pattern and a bullish move currently on Ethereum. All right, gold is not really looking too Goldilocks. All right, it's holding 33.30. It's been the level that we've been maintaining. It's trying to really, once again, guys, across the board, when you get a massive spike to the upside with a massive spike lower, you basically go short alongside the massive spike lower for new lows. This is across the board on basically every asset class that we're seeing right now. Gold isn't really no different. For us to make new highs would be very, very aggressive. And generally, if we get new highs over here, then the move lower would be that much more severe. Generally, that's what tends to happen. So gold, that's currently what I'm looking at on gold, to be honest. And silver, basically, this is also what's going on silver. We're going to most likely try to retest the 618% fib, get somewhere between the 786 and the 618% fib, essentially. This is a bear flag. Bear flags end up going lower. This is not the most bullish situation. Technically, it's holding above 38, which is a miracle on silver. But in general, this is not the most bullish situation currently on both metals, really, to be honest. And last but not least, this is the chart of the Nifty 50, the Indian markets. We were showing a falling wedge on the Indian markets. And of course, falling wedges are bullish patterns. We were at support. We're showing some strength. And today we ended up gapping up. So as long as the Nifty can hold above 24,850, then it will be pretty nifty for a continued move to the upside. And this is the most dad joke, Indian sort of jokes that I've ever made. And it would be very, very nifty for a move as long as 2850 can hold. And I'm going to stop saying that for now. So that's that, really. That's really that. Honestly, we could take a look at the Chinese markets. The Chinese markets still have room to go to 25,000. We have that gap to fill, right? I was showing how yesterday, we had the gap to fill on the Hang Seng. And the Hang Seng falling a bit lower and touching these is going to affect BABA. It's going to affect JD. And it's going to affect Baidu, which are the main Chinese stocks. So that's why, essentially, as long as the Hang Seng can hold above these levels and it starts to bounce back up higher, that's going to be way more bullish for the Chinese stocks. But for now, it doesn't seem like we're going to be getting any tariffs on China. We're not going to be getting any increase of tariffs on China that Trump was basically alluding to, because of the the talks that we just had with Russia in Alaska. So yeah, we're not going to get any extra tariffs on India or China, and that should be good for the overall Chinese markets as well. Let's just see what ends up happening. But for now, that's that for the overall market. I hope you guys enjoyed the video. I'm putting in a lot of effort into these videos, so please make sure to like, comment, subscribe. Let me know how you guys like it. And I hope you guys have a wonderful rest of your day. If you guys want access to all of my trades, click the link in my bio. Click the link down below. You guys gain access to every single time I'm entering and exiting any single trade with the exact price and the exact minute that I'm entering everything. So if you guys want access, click the link down below. And I hope to see you guys in the community. All right, have an amazing day. Thank you.